Good morning, children. Today we will study about the loan activities in the bank. Loan activities of the bank. People often need to borrow money for various purposes. We know that all the businessmen and the other people need money to run their business, and for that they borrow the money. Many businessmen need borrow to buy raw materials and machineries. Businessmen need the loan to buy the raw materials and the machineries for their company. Many farmers need to borrow to buy seeds, fertilizers, farm equipments, etc. Farmers also need money so that they can buy the seeds, fertilizers, farm equipments, etc. So all the farmers are not rich, so farmers borrow the money from the bank, take the loan from the bank, and incur all these expenses. People usually buy vehicles and houses by borrowing from banks. People also buy the vehicles, houses by borrowing the money from the bank. Thus, credit plays an important role in the economy. By this way, we can say that credit or loan plays a very important role in the development of the economy. Every loan agreement specifies terms and conditions. Every loan, the bank gives the loan on certain terms and conditions regarding the rate of interest and terms of payment. So, every bank gives the loan on specific terms and conditions, and in that terms and conditions, the most important is what is the rate of interest which the customer has to pay and what are the terms of the payment. So that terms of the payment and rate of interest is also decided at the time of giving the loans. In most of the cases, the bank fixes the EMI for repayment of loan. Maximum of the time, the bank fixes EMI. The full form is equated monthly installment for the repayment of the loan. Means if a businessman or a farmer takes the loan, then every month he have to pay the loan with interest. That money is called EMI. Now the second topic is two different credit situations. The first credit situation is for the businessman and the second is for the rural areas, that is for the village areas. A large number of transactions in our day-to-day activities involve credit or loans in some form. So some or the other form we take the loans and then we run our business, or the farmers do the farming work. Loan refers to an agreement in which the lender gives the borrower. Loan means what? A lender is giving the money to the borrower in the form of money, or it can be goods or services in return for the promise of the future payment. And the lender also gets the promise from the borrower for the future payment. So loan is basically the agreement between the lender and the borrower. The lender may give the money, the lender may give the goods, or the lender may give the services. Loan can be in any form, money, goods or services, and then in return, the borrower promises to pay him the money in the future payment, in the future cases. Now, for the businessman, for the business, loan is very important. Credit plays a vital role in positive in the business, whether small or big. Whether the business is small or big, loan plays or credit plays a very important role in the development of the business. In business, the loan is usually needed to finance the working capital. Working capital means in a company there are two types of capital: fixed capital and working capital. Fixed capital, with the fixed capital the company buys the land, buildings and other things, while the working capital is that part of money which is required to run the day-to-day business of the company. That is buying the raw materials and other things, paying the salary to the employees. So all these money are required to run the business, that is called working capital. So working capital is also very important, and working capital is financed through the loans. This is to buy the raw materials. The working capital is basically for what? To buying the raw materials and to pay for recurring expenses. Recurring expenses means the expenses which are daily expenses or weekly expenses, monthly expenses. The loan is usually paid after the finished goods and sold the payments are received. So loan is usually paid after the finished goods. When the goods are finished, it is sold into the market and then the loan is paid, and then the loan is given to the bank and bank receives the payment. So we can see that for to run the business also, for the working capital and also for the fixed capital, both loan is very important. Now second, in the rural areas also loans are very important. In rural areas, the main demand for credit is for the crops production. The farmer requires the loan for the crop production. It involves considerable cost on seeds, fertilizer, pesticides, water, electricity, repairs of equipments, etc. So farmers also require to buy the seeds, fertilizers, pesticides, water, electricity, repair of equipments. All these expenses are there of the farmers. So farmers also take the loan from the bank to buy all these expenses. There is a minimum 3 to 4 months between the time when the farmer buy the input and when they sell the crops. So farmer basically takes the loan for 3 to 4 months. Why? Because the crops required to be harvested for 3 to 4 months. Farmer usually take crop loan at the beginning of the season. So at the beginning of the season, the farmer takes the loan and repays the loan after the harvest. After harvesting, he sells into the mandi, and then after that he repays the loan. Repayment of the loan is crucially dependent on the income from the farming. So as the income of the farming increases, he repays the loan. Now, what are the terms of credit? The loan is given on two terms. These two terms are very important. First is collateral. When you take the loan, you have to submit your property documents. Then that is called the collateral. Property documents or insurance documents or maybe investment documents, fixed deposit documents. So collateral is an asset which is owned by the borrower. So collateral is a asset of the borrower and is used to guarantee to the lender while the loan is repaid. So when the borrower goes to the lender to take the loan in the form of guarantee, he gives the collateral. That collateral may be in the form of land, house, vehicle, livestock, deposits with the bank, insurance policy, gold or other things. And after depositing all these things in the form of guarantee, the borrower gets the loan from the lender or the banks. If the borrower fails to repay the loans, the lender reserves the right to sell the collateral to obtain the payment. And if the farmer or if the businessman is not able to repay the loan, then the lender or the bank will sell the collateral and take his money. Second is terms of credit is documentation. The transaction between the lender and the borrower are put on record. So the transaction between the borrower and the lender is recorded on a paper that is called document. It includes the rate of interest, tenure, collateral and mode of the payment. So in that payment, the rate of interest is written, tenure, in how many years you are going to pay the loan, that is written, collateral, about the collateral is there, and the mode of payment is also written in the document. The term of credit varies from one loan agreement to the another. So it varies from one loan to the another loan agreement, and also on the nature of the lender and the borrower. So according to the lender and the borrower, nature of the lender and the borrower, the terms of credit vary. Today only this much. Thank you.